This is NDTV, and you're watching Classics.
In a volatile global equity market scenario, we have with us Mark Matthews, Chief Asia Strategist for Equities at Merrill Lynch. Mark, thanks so much for joining us. Let's talk about what the situation is right now in equities around the globe. We seem to be witnessing a sort of bear rally.
We are witnessing markets that are going up. You could call it a bear market rally or the beginning of a new bull market. That's the big question right now. And I don't have an answer because I think there's so many moving parts. But the two most important moving parts, or the ones that are getting the most attention right now, are the oil price and the state of the credit markets. And with those two, I'm optimistic on one and pessimistic on the other.
You're optimistic on oil prices going down?
Correct, yeah. And it's not just me saying that. We have a commodity analyst at Merrill Lynch who is very good, and he's forecasting $110 to the barrel by the end of this year, and then 107 on average between, throughout next year. So the good news is that that's lower than where we were in the middle of last month when we got up to 147. And I think when we got to 147, then people started thinking, well, if it can go here, it could go to 200.
So there was a lot of panic selling at that point?
Yes, there was. Yeah, there was a lot of panic selling related to oil.
And you think that's reversing?
Yes, I do. I think many moving parts in the oil price, but one of them was that a lot of investors had been putting money into commodities funds, which in turn had been buying commodities futures. And as a result of that, the oil price had been moving up, in part. So now I think we're seeing institutions unwinding those trades. They're worried that they're going to lose their profits. And so they're unwinding those trades. And that's one of the reasons why the oil price has gone down.
So overall, you expect a downward trend as far as oil prices are concerned from here, which means for you, India is suddenly looking more attractive again.
This is absolutely correct, because we looked at the relationship between our economies and markets throughout Asia and oil using 7 different variables. And what we found was that India was the third worst impacted by the high oil price of any country in Asia. So it certainly stands to reason that if oil goes down, then equities should go up, because oil was one of the big reasons why equities went down. And in fact, India and the Philippines, outside of Vietnam, are the 2 worst performing markets in Asia this year. The Philippines was another of those 3 countries which was the most impacted by the high oil price. And
yet you remain underweight on India at this point. When do you think you're going to upgrade that, or what are you watching out for right now?
The key thing holding us back is the valuations in India remain stubbornly high. And in fact, having mentioned the Philippines is the cheapest market in Asia on a price to cash flow basis, on an earnings basis. Unfortunately, India is the most expensive on a price to cash flow basis and the 3rd most expensive on a price to earnings basis.
So how much more of a downside do you need as far as valuations are concerned to actually reverse your...
Well, it's all relative. It depends on the other countries too, because we're comparing it to an average. All I can say is that oil is not one of the variables that I use to determine my asset allocation. Clearly, oil has greatly influenced the Indian share market this year. So even if my valuations are telling me that India is not as attractive as the Philippines, if the oil price comes down, I imagine that Indian stocks will go up a lot.
Sometime last year, Merrill Lynch came out with a report saying, sell India and China, roughly, I mean that was approximately what it was, buy into Brazil and Russia. So does that still stand for you?
Well, I don't look at Brazil and Russia, I just do Asia. But I can tell you that it's very interesting, from 2002 to 2007, that BRIC asset class you're referring to, Brazil, Russia, India, China, basically they all moved in parity. They all went up together. There's a big bull market for emerging markets, including those 4 largest emerging markets in the world. But then you had an interesting bifurcation throughout last year, where India and China massively outperformed Brazil and Russia up until the end of last year. And then they came all the way back down. So if you can imagine, it was a pyramid. And here we are back at the base. So the question is, what do we do now? And I think the answer to the question is the oil price. If the oil price is going to go back to 147, then Brazil and Russia will significantly outperform India and China.
Right. Last two questions. One is, you were saying earlier that you expect, say now, a 10% more upside in the next 12 months for the Indian equity markets, for Asia.
No, but what I meant was that if you look at past occasions where Asian markets have deviated as much from their 200-day moving averages as they are now, and you add up those past occasions, and then you measure the performance of the markets over the next 12 months for each of those occasions, you'll find that on average, the markets rose 20%.
What are the sectors that you're bullish on as far as the Indian markets are concerned? What are you bearish on? Are you bearish on banking, IT, some of the typical sectors that people are ruling out right now?
That's what Jyoti does. I can't really comment on that because that's what our Indian research team do. So I don't do Indian stocks.
And your favorite pick in Asia right now?
What is that, a stock, you mean?
Region.
Region. What I would say is that I think there's an opportunity in financials. Because as I say, I do think that this rebound will continue. I can't tell you how much longer it's going to continue for. But the financials have been the sector the most punished by the credit crisis. And when I screen for stocks in the region, which are trading below 2 standard deviations from their 5-year average price to earnings or price to book ratios, what I find is many financials, specifically Australian financials. So
what about Indian financials?
No, they don't appear. No, they're not there.
So you're still waiting for valuations basically to come down in India. That's the wrap of it.
I don't think. No, it's not the only thing. No, there are other things too. I mean, inflation needs to come down.
The fiscal deficit,
political
situation, a lot of variables.
A lot of variables.
That still make you underweight on India at this point. But hoping by the end of this year that'll turn around.
Yeah, that's right. Yeah.
Thanks so much for joining us.
Thank you.